This my two Satoshis. This my two Satoshis. Who need 2 cents when they can get double from stacking Toshis? Yeah,
It's your boy Crypto Blood, and welcome to another My Two Satoshis. Today it's all about taxes. I know all of you out there pay your taxes, so I'm not worried about that. But what I want to talk to you today about is how your tax returns could possibly be flagged by the IRS. There are a couple of things that would red flag you, even though the odds of being audited is very low, like 0.29%, not even 0.5%. So the likelihood is very slim, especially if you're not making multi-millions of dollars. The more money you make, the more you got to stay on top of it. Last year, I think the IRS audited maybe 452,000 people. That's out of like 170 million people who filed their taxes, or 150, something like that. So that just puts it in perspective, but still might want to know exactly what they are looking for and what's triggering a potential tax audit. And yesterday I talked about this on My Two Satoshis, but I'm going to bring it back up because this really folds into what is going on. Coinbase partners with TurboTax for tax refunds in crypto. I talked about it again yesterday, and I just want to touch on it one more time today because I think this is very neat. This is better than paying your taxes in crypto for sure. And this subject was actually brought up on BitBoy's show yesterday. That's back on the Senate desk. Virtual Currency Fairness Tax Act, that's of 2022, is back on the hill. We're going to talk about this and what this means. I think this is a good step in the right direction, especially as I told you the other day, Bitcoin is not great for spending day to day. I think it still isn't from a technical standpoint. But in addition to that, I was saying from a tax IRS liability, it isn't either. This bill, if passed, will at least help transactions under $200, and that will greatly help the day-to-day spending of other cryptocurrencies that are better used for payments. Because don't forget, every transaction you make is taxable technically. I know a lot of you aren't really reporting that, but that is the technical stance from the IRS. Every transaction is a taxable event. And lastly, to the contrary, not surprising though, right? India just hit their citizens with a 30% tax liability or levy on cryptocurrencies, and that is including NFTs, basically all virtual digital assets. As you guys can see there, that is ouch, major. Unfortunately, that is just about the amount that many of you will be paying this year with taxes in the United States, because it is looked at as a capital gains tax. So that could put you in the 20 to 40% bracket depending on your income. So maybe it's not out of ordinary here for them to be doing this, India that is. But we'll talk about all these articles on today's episode of My Two Satoshis. But before we start, if you guys find these types of videos informative, make sure you like, share, and subscribe, and click that bell to receive more videos like this. And before getting started today, we got to check that heat map, guys. Bitcoin, all the altcoins up heavy, up big time. We got a short squeeze going on. Bitcoin is up 10% today. Ethereum was up 13%. I don't know what's going on with the Coin360 site right now. It kind of reverted back, but you saw what I saw. It is going ham right now. And you also have on the other side, stock market doing fairly well. Dow Jones kind of closed below unch, but S&P, as you guys can see at the top there, has risen to its best weekend of the year so far, with Amazon really pushing it higher, over 1.6% higher. Nasdaq was up also 1.5%. S&P up just slightly, probably bogged down by Facebook. If you guys don't know this fact, this is crazy. The 5 biggest tech companies now make up 17.5% of the S&P 500, basically price index. That is insane. Out of 500 companies. Not a good look. Not a good look. That's too concentrated in my opinion. But hey, that's a conversation for another day. Today, we're talking about taxes, and I want to get into it. And, you may be asking why CB is the crypto markets moving up. It could be a number of factors that initiated the move up, but then caused a short squeeze, because technically we were not in a great position. And still, honestly, we're not out of the red yet. I'm gonna be honest with you. If we look at my chart, you'll see, and I was monitoring this last night or this morning, we saw a breach above this trend line I had heading lower, and once we breached it, I saw us bounce back to test it and bounce right off of it. That's a very strong bullish move, and so we did bounce off of that trend line, the top side of it, and just took off. I think a lot of that was shorts being washed out, forced to cover and buy back the crypto they were shorting. And consequently, that made the price of Bitcoins move go up even more than it should have if shorting wasn't involved. There were a lot of shorts involved. But at this point, there's a reason why I have this yellow dotted line here at $41,000. I still think that is probably the upper bound if we even get there. What we would ultimately need to do is get back above this red line, as you guys see here. So I see a lot of resistance here at that yellow line. And then the final resistance is at the green line, which is the top of the channel, which I don't think we're going to get back above. I'm just being honest with you guys. If I were a betting man, I would definitely short up in that area. Now, my algo doesn't care what I think, doesn't care what you think. It just goes off price action. And boy, did I take a lot of that, basically all that run up that happened. I went long yesterday and boom, it just went crazy. And I got about 8% out of that move in the right direction for me. And also actually was able to take some great trades on the shorts. Took some profit here, 50% of my short off at this dot, and then another 50% right before this jump here. And then we went long. So it's been a great week for me trading, actively trading. Even some good trades back here, but what a great way to end the week. Enough about all those gains that I got to pay taxes on. Here is a reason, or reasons, plural, that you may be flagged by the IRS with your tax return. And as I stated at the beginning of the video, you know, a lot of people won't get audited. Only 0.29%, a third, not even a third, just shy of a third of a percent of people were audited last year, or in 2020, I should say. That's only 452,000 people out of 157 million people. So that gives you the contrast there. Is the likelihood is very low for you, for sure. And you know, some people play that audit lottery, meaning they'll do whatever they want and know that the chances of getting caught are slim. I bet a bunch of you watching this video right now are audit lottery players. And so some of the top red flags that the IRS looks at is excessive write-offs compared to your earnings. You can't go out here and make $100,000 and then write off $120,000. Like, it's going to be a red flag. They have an algorithm that gives them a number based on all the inputs, and then that shows them, you know, whether or not this tax return may be fraudulent. Unreported income, that's another one. Refundable credits like the earned income tax credit, home office and auto deductions, and rounded numbers. Rounded numbers, yeah, that's a problem. If all your tax returns are coming back with rounded numbers, that means you're just making up stuff. It's got to be realistic, people. It's definitely got to be realistic. That's a huge tip off. That'll just make them see that you're making up numbers. Self-employed filers need to be careful as well when claiming write-offs for their home office or their vehicle, because those must be exclusively for business purposes, which may be more difficult to prove. And just remember, guys, the burden of proof is on you, because if the IRS wants evidence, you'll need to have those readily available, those receipts. So, and you'll want to keep records for 7 years just in case. But I will say that there's a statute of limitation on IRS filings. It's usually 3 years, but if there's fraud involved, meaning you're trying to game the system, there's actually no limit on how long the agency can pursue frauds or non-filers. So keep that in mind, please, and keep your receipts if you are deducting things. I'll leave a link in the description of this video so you can go through this article in detail for your own benefit if you would like. Also, regarding taxes, I talked about this on yesterday's video. Crypto tax bill is being proposed yet again to reduce that liability for transactions under $200, and this will definitely help for day-to-day uses of cryptos for many people out there who do hold crypto. $200, in my opinion, is still just a little too low. It needs to be higher. I think 1,000 at minimum, 500, I think, but $200 might be a little too low. I can't buy a pair of Gucci's for $200 now, people. Give a brother a break, please. So the bill is called the Virtual Currency Tax Fairness Act of 2022, which is a successor to the one introduced in 2020, and that was announced on February 3rd by Representative Suzanne Delbene and a few others. So they want an amendment to the Internal Revenue Code of 1986. The bill aims to exclude gains from certain personal transactions of virtual currencies. This will be very good for the metaverse, right? micropayments in the metaverse or on websites or whatnot. That is very important, because that, as it stands right now, every micropayment is going to be subject to a tax. Del Bean said here that antiquated regulations around virtual currency do not take into account its potential for use in our daily lives, instead of treating it like an ETF or a stock. I agree. And to reiterate, as I stated earlier, the capital gains tax here in the United States is about 20% at minimum. Okay. And again, that goes up based on your income. And so that can go all the way up to 40% or more. And so I'll talk about India next, and we got Thailand. They scrapped their plan to put a 15% withholding tax on cryptos because they got a lot of pressure and pushback on that. Instead, they're going to run it under the capital gains gambit like the United States has done. I don't know how that pans out. Maybe better. Maybe the capital gains in Thailand is lower than the 15% they were going to withhold for taxes on cryptos. Not sure. But India ain't playing no games. India's new crypto tax law was just announced, and India is going to now levy a 30% tax on cryptocurrency transactions. The announcement followed months of speculation on the Indian government's stance towards cryptos after it had previously released warnings against them. So, there are some people in the country that look at this as a stamp of legitimacy. Some are outraged. So what do you think? Like, if there was no position on it before and now they've given it, at least it's 30%, is that a good thing? Or do you think being in the gray is a better scenario? Of course, I know, like you, a firm proponent of not taxing cryptos, but hey, you live in the country, you gotta abide by the rules. Now, the interesting thing about this move by India is that this 30% flat tax is on all virtual assets. So that's including NFTs. Unlike the United States, we have no guidance on NFTs at this point, really. They've gone out and jumped ahead of it and said, hey, 30%. Any NFT you exchange, trade, 30%. The tax liability of the recipient who receives a gift of virtual digital assets is also applicable. Yikes. 1% tax deduction at source on all transactions in digital assets. This is like the government is like these NFT marketplaces where they're skimming off the top on every transaction. This is insane. When is enough enough? When are the people going to fight back? They're going to just tax this burgeoning technology and industry into oblivion. I asked a question about whether or not you would like for your government to tax it or leave it as a gray area and not give you any guidance on it. Well, it looks like India actually is doing both. Honestly, they haven't legalized the cryptocurrency sector, but instead just went ahead and taxed it, which is interesting. How do you not legalize it, but you're ready to tax it? Boy, I tell you. So with this new tax law implemented over in India, you can no longer offset your losses against your profits. Ouch. Cryptocurrencies are now treated like commodities. A mechanism for identifying cryptocurrency investors is on the docket. That's on the way. They're trying to do that. And virtual assets have been defined as property. Let me know your thoughts. I would love to know how you feel about that. Is what India doing better than what is going on in the United States, or vice versa? Let me know your feedback on that. And don't forget, I talked about this yesterday, Coinbase partners up with TurboTax for tax refunds in crypto. So that is an option for you if you're using TurboTax. Make sure you take advantage of that. I'm a strong proponent of that one. Definitely get your money back from the government who's been holding your money, right? A tax refund is really they're not giving you anything. They're just giving back what you overpaid. That's all. Take that money back, put it in crypto. I think that's a great plan right there. It's your boy Crypto Blood, and make sure you guys like, share, and subscribe, and click that bell to receive more videos like this. I'm out of here, people. Holla.